G'day traders, I'm Greg McKenna. Welcome to Markets Morning. I'm going to try and talk a bit slower today. Mrs. McKenna has told me that I'm talking a bit fast on the intro and then I slow down. So hopefully that works a little bit better for everybody. It's the 5th of November, Monday, the day that sterling tried to rally on the back of news that Theresa May is almost ready to shoehorn her cabinet into a Brexit deal. But still, this morning already, we've seen it fail up at resistance around 130, 55, 65, and just recently, the last half hour or so, EU via competing UK newspapers have said there's still some distance away. So we'll talk a little bit about that. On Friday, the US dollar was under pressure. One of the reasons it was under pressure was because of talk, not just of Brexit, but talk that the US and China will do a deal. Why does that cause pressure on the US dollar? Because it takes its foot, or the trade war, the slowdown in the global economy that could come from that, takes its foot off other economies, off other currencies. And so emerging markets, the Aussie dollar, copper, those kind of things, they can get some room to breathe. And that's why, in a very strange way, the end of the trade war is actually a US dollar negative in some senses, at least in the short term. Anyway, the wash-up was we had 250,000 payrolls from non-farmers on Friday night. That was huge. We got 3.1% rate of growth in annual earnings. Hourly earnings year on year. And that's the highest since 2009. That combination really does say that the Fed is going to hike, and we saw US 10-year bonds up at 3.21, 2-year bonds at 2.91, and of course that reversed the Aussie, reversed the Euro, reversed sterling, all that kind of thing. At the end of the week, the US dollar really only won against the yen. Everything else had done better than the US over the course of the week. Even, the euro, marginally so. It traded down to, I think it was 112.99 the low last week, and here it is this morning, back at 113.87, which is roughly where it closed on Friday night. In terms of other markets, gold had a good rally, copper had a good rally, as I said. Oil collapsed again, another 1 and a bit percent. It fell 6 and a bit percent, I think, over the course of the month. So that was all interesting. Let's dive straight in. It's an interesting week. We've got the RBA, the RBNZ, and the Fed this week. We've got PMIs for services this week. It's going to be a decent week. So I'm going to kick off with foreign exchange. It's Monday, so we're going to look at the weeklies. And what I've done this week, and it might take a little bit longer than normal, I've taken all of the lines, all of the Fibos, off all of the charts except for gold. And what I've done is I've put my new template on, and that way we can get a clean view, and perhaps together, even though I'm doing it on my own here in a room, together you can see how I map things out. Anyway, let's dive in. Here's Euro. So what have we got? We've got Euro weekly. Could you argue? I guess you could, that that's a head, that's a shoulder, that's a shoulder, and then a break of 113, given that that was 125 or thereabouts, opens a run back down here into the 101s or something like that. That's certainly a chance. If I just put a straight Fibo on that, and we go there, then you can see where I get that 108 from that I talk about all the time. Given I use Fibonacci extensions all the time, you can see that's got 113.20, which means I haven't put it in the right spot. There we go. No, it's not 112.87 either. It's 113 was the low. Anyway, not enough of a gradient. Anyway, that'll do. Close enough. So that's where I get that 108.20 that I've been talking about for some time. But it's got a break and close. Now, what have we got here? We've got indecisiveness and holding. If you think about that, here's our parapet. What have we got? We just got a big old range, haven't we? 118.50 to 113. A break of 112.80, because remember on the dailies, 112.80 was the level, or 112.77. A break and hold below that starts to get us moving. And 108 would be the target, particularly if we have a weekly close below 113. At the moment, though, and I say this all the time, you've got to respect these levels unless or until they break. Trying to preempt, over the last 12 months, a couple of times I tried to preempt the break of a range, not just in Euro, dollar knock, some other sort of crap, and I got hosed, absolutely hosed. Reminded me once again, you're not supposed to preempt breaks. And if you're a nervous person trading breaks, something I might do is I might go a quarter my normal size in on the break, and then on the day close, I will go the full lot, or if it's a week close, I will go the full when I say full lot, I mean the full percentage of what I'm wanting to put on the trade. But anyway, let's go and have a look at sterling. We'll come back to dollar yen after sterling. So if I can find my sterling, there it is. So what do we got? This is sterling as it stands now. This is our double top up here around 147. This is our recent low around 126.60, recalling that we got to 126.90 last week. This is our low down here. And so the natural thing to do would be on the weekly basis to draw that and to see that sort of 125.25 is resistance. But then I want to go this way so you can see the import. And again, I could blow that up, but I'll just, so 133. Now on the dailies it's 133.20, but let's just call it 133. So this bounce, if it can get up through 130.60-65, it can run to 133 figure 20. If it gets through 133 figure 20, then I'm looking for the 61.8, which is 137. Now, there is a lot of headline risk here. I've tweeted this morning, so have a look, and it's in my morning note. If you haven't read the morning note, have a look, because I can't cover everything, because this already takes 16, 17 minutes, and then you've got the other stuff. Anyway, what have I got? We're at 130 roughly now, right? A break of 130.65 gets me 133 figure 20. Break of 133 figure 20 gets me 137. Break of 137 gets me 142. On a negative Brexit, so that's all positive Brexit. On a negative Brexit, I'm back down at 126.60. A break of 126.60 gets me 120, which is here. So this is, this is not for the faint-hearted. Now, what does that mean? For me, as on Brexit Day, until there's some sort of clarification, it means smaller positions. Now, I know for some of you out there, you use a lot more leverage than me. I only ever use one. Often I never use one. But that reflects how much money I got in the account, I suppose. But the reality here is that this is not a time for big leverage. If I was the chief dealer in your dealing room or the risk manager, I would come to you and I would say, Joe or Josephine, you just got to scale back your risk on your sterling trades at the moment because there's a lot of volatility here. So you have smaller positions and bigger stops, or smaller positions and tighter stops, however you want to play it. You play on smaller time frames or bigger time frames, or however you want to play it. It's just a much more dangerous time. So you've got to have your risk control measures. Anyway, we'll talk about that as the week goes on, but that's the key thing with sterling. Dollar yen, interesting. So what have we got? You have a look at dollar yen in that sense, and you kind of think, well, heck, it's going nowhere, right? So I'll just put that there and there. So that's basically what we've got just on the weekly dollar yen. And that's since, the beginning of this year. Earlier this year, I should say. So what have we got? We've still got this 114.54. We've got 110.75. If you just look at it on a pure weekly basis, the uptrend. So my Jimmy R, the 15 and 30-day moving averages are still pointing higher. It should go to 114.54. If it breaks there, it runs. And I'm saying 54.75 in my, this thing. I've said to myself 114.55.75. If it breaks 75, then I'm looking for 118. 75 and 114, of course. Don't forget, we've got this zone across here. You can also draw, if you want to blow it up, you can draw a little trend line there, which I'll do for you, across the fractals. And so support today is 111.40. So we're 113.20. We've got 120 up, 200 down. Doesn't help you much, but this is the weekly. It's Monday, so we're looking at weeklies. So that's where we are for dollar yen. I think it trades higher, but it's going to depend on stocks. The correlation with the yen and stocks is still quite high. Now the Aussie, you can see my new template. My new template is volume down the bottom, MACD here, and then fractals, plus Bollinger Bands and my Jimmy R, 2 moving averages. Now, the key thing here is that if you need to save something like that as your default, so that when you open a new chart, you do it, you save it as a template, but then you can also call the template default, and when you open a new chart, I don't think I've done it on this one. I did it on another. Let's just pick one. I've done it on another one. What comes up? See, that's still my old default template, which had ATR. But the ATR is in my spreadsheet for position sizing calculation. Anyway, the key thing here for the Aussie is it closed outside the downtrend from the 81.5 highs. That's the first signal that a run could envisage. Now, I don't know if you follow me on Twitter, but if last Thursday there was a little head and shoulders on the 4-hour charts, I got out at 72 on Friday morning, but the projection was 72.60 based on that little head and shoulders and the break of 71.20. That's where the high was roughly on Friday night. What I'm saying to you now is that 72.60 is resistance, but it's got to get through 72.80 if it's going to kick towards 74.40. The MACD is starting to suggest, remember when the Kiwi did this, we had that false break before it actually did. A retest during the week back towards here, which is about 71.50, I think. As long as it holds above 71.50, I'm going to target 74.40 on a weekly basis. Dollar-cad, interesting dollar-cad. So, as you can see here, right, there's bad drawing, sorry. Right, so you can draw that like that, and so you've got 1, 2, 3, approach and fail, or if you wish, I think that one, kind of dodgy that one, but you can see, look, the initial point, 1, 2, 3, 4, 5, 6, 7. So 7 touches on this one, so let's get rid of that first one. Right, 7 touches on this one. Then we've got this little bottom, that this gets steeper, as you can see. You know what I think about steepness, even though that's not very steep. This is going to take forever today. I'm going to get my skates on. So you can see dollar-cad's going nowhere. The correlation between dollar-cad, and oil is about 0.8 something. So keep an eye on that. If oil continues to falter, then dollar-cad may look better. One thing while I'm on these US dollar-based pairs is the US dollar, the market is still very, very long of US dollars. That in itself is a natural handbrake on the rally. And if you have a think about what I've been saying for a long time now, the US dollar needs catalyst. People don't like the US dollar. I do. And there's a few of us out there on Twitter who do. And the Elliott Wave people seem to. But people inherently, fundamentally based people do not like the US dollar. They worry about twin deficits, but they forget about interest rate differentials. They worry about twin deficits and they forget about economic growth differentials. They worry about they just worry. Anyway, so here's the Kiwi. This is what you had with we had that break up, first break. This one could actually rally. And I've written to myself, it could get to 67.5 to 68. 68 is a magnificent line in the sand for the Kiwi. 67.94. So continued signs of base building as failed break followed by a strong pulse. Target 38.2% at 67.94. So that's what I'm targeting on Kiwi. So you can see that the US dollar may be under a little bit of pressure. Now gold. Gold a bit messy, as you can see. But remember, we talked about this roll in the weekly some time back. We've had this surge. Friday night's move was huge. Now, central banks apparently have been buying physical gold. That's a really, really long tail. I think it's going to 12.52. It didn't get as low as I hoped last week, unfortunately. This is one of the things you'll notice. It got to 12.11. I missed that. One of the things you'll notice is when people hope that things go lower or go higher so they can sell them or they can buy them, they tend not to. So anyway, so what have we got? We've got 12.34. We've got to get up through 12.38, which is short-term resistance, and 12.52. It is building. It's starting to stall, though, very much stocks. So gold is correlating with stocks. Stocks were down on Friday night, as we discussed right at the open. If you have a look at copper, copper was making me uncomfortable about the Aussies rally on a day basis. The Aussie had shot higher and copper was lagging. That's been remedied on Friday, but the reality is that copper's got to break 286.5 before you get excited. If it can break 286.5, it can go to 293. 293 is that basically this base across here. If you can get above 293, then we're talking about completely different outlook for copper. We're talking about much more positive outlook. I'll get back to silver in a sec. If we have a look at the oil prices, what do we got? We've swung from 90 buck, 100 buck oil all the way back to, heck, there's too much oil, what's going on? At some point, probably Wednesday or Thursday, after the midterm, we'll hear from OPEC about supply cuts again. But if we have a look at where we are in terms of the overall oil rally, then that's from the low. So this is how simple drawing trend lines are. I don't know if you could see the obvious trend lines on that original chart. And then there's this one. That one, which was the inside one. You remember that from the charts? So what have we got? We've had touch, 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 touch. Right? Then we started to roll. I've been saying 70.28. This is WTI. This channel, I should say, comes in around 57. So on a Fibbo, I'm kind of looking at 60. So we're almost there. We got below 64.48, which was my target for ages, as you know. So this is all cream. Have we had a pessimistic crescendo? I think we might be getting close. Anyway, we'll have a look at Brent. We could be in for a bounce first. I haven't updated the chart on this one. That's okay. We'll do that later. So we've got a big, strong uptrend. It's reversed. 71 sort of 28 was the shorter time frame. But you can see here 71.67 Fibbo. Also, this region here, 71 is really important. Remember a while back, the break gives me the target. Remember that? And it got to the target. And that was after we had the break, test, a little bit of a break back below, and then the raw. So what have we got now? 71 bucks is really important. Break is 71. 70.71 get you 65 maybe even a little bit lower. There are some Elliott Wave guys out there who think oil's about to get absolutely hosed. Right, you take, what would we probably say there? We'd probably say that's more of a Davis box than the wedge that I thought it was in. You could probably just draw a line across there as your high now. Not exactly as straight as I'd like, and you probably draw a line across there as your low now, and just trade that. 15 bucks for me is the key for silver. If silver breaks 15 bucks, it could really run. What am I? 17 minutes and I haven't even done stocks. Sorry, folks. I thought this might take a bit longer because I was explaining away as I went. Let's just do the S&P 500. Right, now I've taken all the charts off there. All the lines, I should say. So obviously there's one from, basically all the way back there. But let's just do this one first. One thing you have to do when you, what was I going to say? One thing you have to do when you, so that one there used to be the inside of that one. So I'll fix this up over the week, but let's just have a look at it in that sense. So there's that one, that one there. You can see it's kind of held. There's also one inside. There's that one that it's broken. There's that one that's been broken. And if you say this, I'll give you this one. That's the Trump rally, I think. So you see what I've said in Markets Morning is last week's candle holds the key. A break below 2600, naturally. A break above 2765 is your next story. Now I know that's a big range. It doesn't help you on a daily basis, and I know that there's lots of people out there to talk about big pictures and things are going to go to here and things are going to go to there and all that kind of stuff. I know from experience that the ability of people to hold on for 6 months or 12 months on a trade is lacking in most people. There are viewers out there, and I know who you are, who can actually do it, right? But most of the people who are watching this aren't going to be able to. They're not going to be able to take the 2-cent swing or the 200-point swing. But from a weekly point of view, break either side of that is where the next big move lies. So keep an eye on that. In terms of our local market, it's still struggling. 55.90 to 5600 is still the key. If that breaks, then all bets are off, and it'll just collapse. But while it holds above that, it looks okay. To get a real wriggle on top side, though, it's got to go and take that one out, which is sort of 59.33 is where I'd have to see it. So you've got a big range there, haven't you? Again, but this is weeklies we're looking at. In terms of the DAX, it's 11.5 to 11.7 is important. It got down to 11,000, which was my target. Obviously, we talked about that. Now it's rallied a little bit. So, it's really trapped below this 11,700. I haven't updated this chart either. 11,700. If it can break up through there, then it can run for a bit, maybe 12 and a half. But if it breaks down, which it looks more likely to go lower, but not getting too worried until you see that level break. One of the key things is a lot of people are going to come in after the midterms, and they're going to think the stock market's going to rally. So that's going to be their predisposition. But with bonds at 321, watch 325 on a US 10. If 325 breaks, then it's up and running. Now, I haven't changed Bitcoin. It's going nowhere. Basically, it does look like it wants to pulse higher. It does look like it wants to run to 7,100. It looks like it wants to run to 7,400, maybe even higher. Hasn't broken out yet. You'd have to... basically, that's the weeklies, and it's not going anywhere. There's bigger fish to fry than Bitcoin at the moment. Anyway, that's it from me. It's a big week. I'll be back tomorrow with the dailies. Hopefully, that's a good explanation of what I do and how I do it. Any questions, please feel free to come back, either via YouTube or direct. If you're on my email list, then you know my email address. I'll talk to you then. Bye for now.